Hello and welcome to the Stephen Street offices of Gilroy Gannon Chartered Accountant Sligo. I'm joined by Tax Director for the firm, Desi Foley, and Senior Tax Manager, Laura Cassidy, and for a local view of business and its effects of this budget by Kevin Egan, Managing Director of Kevin Egan Cars. Desi, this has been billed by Pascal Donoghue as an absolute no surprises for this budget. From a personal taxes perspective, is that true?
That is very true, Jim. Yeah, like in terms of personal tax, there's been no changes to the mainstream personal tax credits or tax bands. So your normal employee will not see any difference in terms of their take-home pay. There's been two, I suppose, to note increases in tax credits. The home care tax credit is up by €100 to 1,600. And the earned income tax credit is up to 1,500, so a 150 increase. The earned income tax credit, essentially that's a tax credit for self-employed people and company directors. For years they actually had no tax credit, so it's been gradually increased in the last couple of years, it's good news for them, and it's nearly on a par with the PAYE tax credit, which is 1,650. But like if we look at our tax bands and rates, like from year to year, they're pretty much identical there, with the exception of the home care tax credit and earned income tax credit. On USC, the Minister actually didn't even announce anything in respect of USC, but we'd expect there'd be some minor changes there. Essentially, he won't want to bring people on the minimum wage into the USC net. So we'll see later in the detail of the budget what's involved in that. And farm restructuring relief has been extended by a couple of years too, so good news for the farmers.
All right, so nothing too dramatic.
No.
We can't say that for capital acquisitions and stamp duty, Laura.
Yeah, so there's been an increase in the Group A tax-free threshold from 320,000 to 335,000 with effect from tonight. That threshold is really used for children who receive gifts or inheritances from their parents. While it is a welcome increase, it still falls well short of the Group A threshold that was in place before the recession of over €500,000. From a stamp duty perspective, there was a surprise change in the stamp duty rate for commercial properties. That's now increased from 6% to 7.5% from midnight tonight.
All right. Desi, Ireland's famous 12.5% corporation tax remains unchanged, but have there been any other changes?
You're right, the corporation tax rate has remained the same. They're, as usual, digging their heels in on that, which is good overall. On other changes, dividend withholding tax, which we would often refer to as DWT, this is a tax at source when you receive a dividend. For years it was 20%, and he's increased it to 25% from the start of January next year. And I suppose maybe interestingly, there's a second stage to that change from January 2021. It's going to be nearly like a personalised tax rate. So given revenue have access to everyone's, say, payroll details when they get paid through the PAYE modernisation that came in this year, they'll be able to set the dividend withholding tax rate that they want to apply as people are being paid dividends. So interesting to see revenue again use the use of technology and IT to sort of personalise and tailor the tax rates that they want to apply to particular people. Other changes to note, kind of in the corporation tax area, the R&D tax credit has increased to 30%. It currently is 25%, and that's for small and micro businesses. So for your small local business, trying to do research and develop new innovative products, that's a really good relief. And they've also noted that they hope to make the calculation of it simpler. It can be quite detailed, working out those calculations in practice. In terms of kind of existing reliefs and reforms, there's the EIS relief and the keep incentives. On the EIS, they are increasing the annual allowance that you can invest from 150,000 to 250 a year. So that's welcome, for companies that are trying to raise finance and also people that want to invest in those companies. Finally, on transfer pricing, there's going to be reforms in that area from the beginning of January, and that's really to bring Ireland in line with kind of international standards and other OECD countries.
Oh, that's good. Laura, there have been no changes with the job seekers allowance or benefit, but have there been any other changes in the area of social welfare?
Yeah, so there's been an increase in the fuel allowance and the living alone allowance. There's also been some changes to the free GP care for children. So previously it was free GP care for children up to the age of 6 years. That's now been extended to children up to the age of 8 years. There was also no free dental care, and that has now been introduced for children up to the age of 6. There's also been a reduction in prescription charges by 50 cents, and the drug payment scheme threshold has also been reduced by €10 per month.
Desi, there have been some changes on the carbon tax front.
Yes, that's true, Jim. I suppose the carbon tax and motor sort of tax are a bit interconnected here, but before kind of jumping into the direct motor kind of type changes, while you will see an increase in diesel and petrol from tomorrow morning or midnight, around 1 to 1.5 cents per litre, the other fuel increases like your home heating oil have been deferred until May of next year, supposed to let people get over the winter. On the direct motor related type changes, the VRT relief, so really trying to encourage people to go towards electric and hybrid, that's been extended till 2020. And then for benefit in kind, if you have an electric car, there is no benefit in kind. It's a 0% rate there. In terms of directly taxing the high emitting vehicles, last year the minister brought in a 1% VRT levy on diesel cars. He's taken that away, but bringing in a NOx based tax. The NOx is the nitrogen oxide reading, and that's going to apply to all new registrations from January 2020. And it's important to note that new registrations means any car registered. So an import will be a new registration. It's not particularly focused on just brand new cars. And he's committed to, I suppose, investing further in giving grants for electric cars and new infrastructure. So we've Kevin here with us really today to give us his insight really on how he see that might affect really the customer and your everyday driver.
Well, Kevin, no better man to have his finger on the pulse of the local motor trade. How's this nitrous oxide or nitrogen oxide even tax going to mean for you? What's it going to mean for you?
What it means for me, it will definitely entice people into a greener, fresher car, and that's basically what it's set out to do. The SIMI have lobbied for the last couple of months about Budget 2020 and what increases were going to be involved in the budget. Thankfully, and I'm sure they'll be happy with, there's no increase in VRT at all. There's actually a reduction in VRT on diesel cars of 1%, which is welcomed definitely by everyone in the motor trade, I suppose. The Nox Tax then is just going to be basically on every car, including the imports in from the UK and further afield, and it's going to be on every car. The fresher car you buy, the lower the CO2, the NOx emissions will be on the car, and therefore the less extra tax you have to pay. What it means from a business point of view, it basically it doesn't increase the cost of change from your used car sitting on your driveway to the car sitting on the forecourt, and that's the big thing. So we're not going back to 2007, 2008, where there was a big change in VRT, and having an 07 car or an 08 car, there was a huge gap in the value of that car, and it made a difference. It's what it'll do as well. It'll help the government increase the revenues on cars purchased, where on a new car they're averaging €10,000 income, and on a used car they're only averaging €3,600 a car. The older car now will probably be near impossible to import, and therefore bring up that revenue, because I still think we'll be selling used cars from the UK for the next couple of years yet. On the benefit in kind side, you have 0% on the electric cars, which is obviously pushing towards their target for 2030. But from the SIMI, I've been told today as well that there's a lot of money being set aside for infrastructure, where if you're looking at Sligo town here, if you have an electric car, you better hope that someone else with electric car isn't in town, because you only have one charging point, and that's the big thing in rural Ireland at the minute. So that's welcome that to be some money spent for infrastructure.
Good to hear. Laura, it can only mean one topic we haven't touched on yet. That's the one we can't avoid: Brexit. The government have been operating under an assumed no deal scenario. What does the budget have for Brexit?
So the Minister announced a 1.2 billion support package for a no-deal Brexit, and that will span across a number of different industries. I suppose we've just over 3 weeks to go until the 31st of October when the UK is due to leave the EU. And I suppose this highlights the importance that Irish businesses need to be aware of the implications of Brexit on their business and taking action now to mitigate those exposures. Gilroy Gannon would be happy to help anyone review their Brexit strategy and consider the actions that they can take. And we'd also be recommending that businesses are considering the Intertrade Ireland Brexit Support Voucher, which will assist in the cost of professional advice to help you plan for Brexit.
Thank you for that. Kevin, as a local businessman, how does Brexit affect you, assuming there's going to be a no deal?
Well, what I believe over the last 2 years it has affected us. I think it's affected the way people are spending their money. They're being a lot more cautious. Our workshop sales has increased over the last couple of years, where people are fixing their cars rather than changing their cars. I'm hoping that the 31st of October is just a switch, turn it on, turn it off, and hopefully get people out spending when you have a yes or a no or an in or an out situation. I've taken up Gilroy Gannon, their services for their Intertrade Ireland voucher, and Laura's helped me out over the last couple of weeks as regards to new taxes that have to be spent. From my point of view, selling used cars and selling new cars, the big problem we have is with the 100,000 cars imported last year. It means we're not selling new cars, but out of the 100,000 cars imported, nearly 40,000 were bought by private customers themselves. With the taxes and Brexit coming in, it will divert those 40,000 cars back onto our forecourt, because not only with the new Nox tax now, you're going to be buying the car, you're going to have tax of your value-added tax and VAT, your vehicle registration tax in VRT, and now you have Nox tax. But then what's not mentioned as well is you're going to have the 10% customs duty to be paid on all imported cars. That's essentially going to stop the private buyer going to the UK. We're not going to be selling as much used imports ourselves. With today's budget, I think I don't want to put it out there, but I'm nearly sure that the new car market will definitely increase next year as regards to decrease, like it's been doing since Brexit was announced in 2016.
All right, thank you very much for that, Kevin. It's a few hours now since Pascal Donoghue has given his budget, and we're going to get back to writing our more detailed budget analysis, which will go out by email probably before 8 a.m. tomorrow morning. And I would advise you to go off and subscribe to that, www.gilroygannon.com/subscribe. My name is Jim Hunt for Gilroy Gannon. Thank you for watching.